And that means we are now live here on our YouTube channel. It's our daily show here at Tackle Trading. We call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, looking at the charts, the news, economic data, breaking down company information, individual corporate news, whatever's on our mind, grabbing our attention we think is important, informational, or interesting. Have some fun while we're talking about it and help you guys better run your daily routine. Welcome out, welcome out, welcome out. If you are a veteran of the community, you know what to do right now. Hashtag Team Tackle right in the chat. Start the conversation, lively, fun. Encourage people to come on in here. If you are a wallflower in that conversation, I always enjoy watching, the chit chat back and forth as well. But if you feel like coming in, asking a question, participating, we'd love to have you do that. Be a part of that chat. A couple things I want to do before we get started. An intro, everybody. We've got everybody here today. We've got Matt, Mark, and myself, the regulars here on a Monday. Later in the show, we're going to be doing a trash that makes cash. One of our favorite things we do on our Mondays as we prepare, we'll go through all the sectors. Markets are breaking out into all-time highs. But Matt, before we get started too far, let's promote the Huddle if we can. You know, our new daily podcast at Tackle Trading, where we put out the audio of the top 5 stories of the day. Put it right up there on the website right there, the Huddle podcast. And, we do that each and every morning, 11:30 a.m. Eastern is when you can get it. Matt, just talk about the Huddle for just 1 second if you can.
Yeah, Huddle's a great way to stay on top of the market every single day. The top 5 storylines, including kind of a look forward of what's happening today from a price action perspective. Tim, you're doing an absolutely fantastic job with the Huddle. And, like I said last week, the Huddle for me is quickly replacing some of the other things I do on a daily basis. And it's giving me a little bit more time to debate other things. Usually, like T in the pre-production show, we're a good 45 minutes talking about markets, scanning markets, just talking stories. Now Cody and I get like at least 20 extra minutes just to debate certain things, and it's fantastic. So it's the Huddle literally is giving me 20 more minutes every single day, and I love that.
That makes me happy to hear that, because that's the whole point, is to save people time, and as we're putting this out on a daily basis, Matt, we curate the stories, we write them up, the coaches talk about what we're putting out there as a consensus team, and then we put it out in the morning to save people time. So that's awesome. Now, I hope other people are getting that.
I'm certain there's other people at Tackle that want me to have that 20 minutes back so that we don't have those debates. But yes, no, it saved me time, and that's what this is all about, right? Saving everybody time. So I love the Huddle, Tim, and honestly, waking up with your voice, well, that happens every day. But yeah, I like it. It's good.
Warm cup of coffee and me reading you the news. There's nothing wrong with that.
Oh, yeah.
If you're out there and you've not done it yet, Matt, right up here on the top right where that iTunes button is, just show people how they could subscribe to iTunes. You just click that button. It will launch an iTunes launcher. It lets you go right to the page. You can find that, or you can search in your iTunes app, obviously, or any of your favorite podcasting apps. But make sure that you do go and subscribe and get that download on a daily basis. Let's get down to business here. Marky, how you doing today, sir?
Listen, the markets are up too much. Like, I'm a bull who gets a little crabby when the markets go up too much. So,
there's a scenario tonight though, Mark, that I want to talk about before we talk markets. You might have picked the national championship winner and still lose our little bracket to second place.
He's not going to be able to handle that.
I know. I'm out, by the way. I thought I had a good run. I had Houston in the Final Four into the final game and the champion. Mark had Baylor. Baylor knocked off Houston. But our young nephew actually picked both Gonzaga and Baylor. He kind of had that little magic moment there, Mark, and they back end the thing. Did you watch the games on Saturday?
Listen, if you did not watch the Gonzaga UCLA game, you missed one of the greatest basketball seen in my entire life. It was an amazing game with a dramatic finish. It was just, oh my gosh, it was pure joy as a sports fan to watch.
Yeah. And they square off tonight now, Baylor and Gonzaga. Is that right?
They do.
Yeah, it's going to be fun. So I hadn't talked to you all weekend about the games. I knew that you were watching the games. That UCLA finish was incredible. No question about it. And markets being up, that causes you some anxiety. I get it. Does not cause me any anxiety at all. But we have a different approach to that style. Maddie, how you doing today on a Monday?
Tim, I'm definitely not doing as well as the market, but I am doing better than the $1 billion worth of shares GameStop slipping to release there. So I'm in the zone is what I'm saying. I'm in that zone. Not perfect, but better than GameStop releasing $1 billion worth of shares.
We'll talk about this, that story a little bit later in the show. Obviously, I do not blame
You know,
them,
honestly though, you know, when you're looking at the market here, and I've been talking about these markets aligning and getting closer to alignment. And, you know, even last week when we were hesitating in the S&P underneath that breakout channel, we were looking at this breakout channel, talking about, you know, that 3970, 3980 type level. We were talking about how the markets were starting to get a little bit more aligned with the, you know, NASDAQ trying to fight up against that 50-day moving average, and the Russell coming off support. And even though, you know, the S&P is obviously, you know, breaking out and running, and yes, I do expect a new leg up, no doubt about that in the markets, you still have a little bit of concern, not as much in the NASDAQ, not as much in the Dow, not as much in the S&P, just a little, and when I mean a little bit, I mean a little bit of concern about the Russell 2000. And when I'm seeing the S&P, the NASDAQ, and the Dow all breaking out and running fairly aggressive, I talked about the shifting volatility of the Russell 2000, and today's price action gives me a little bit of, this feels like an underperformer type move there. And so I just wanted to point out just very quickly that yes, we are looking really, really good on an early Monday morning. But coming into the week, you still have a little bit of weakness overall in the Russell 2000, and that does fit with what we have been seeing over the course of the last month or so in the market, and what we've been talking about in recent history in the halftime report is about how the Russell 2000 maybe got in front of itself from a fundamental perspective a little bit. Maybe the price action went just way too aggressive in the short term. And when this happens, sometimes, if not a lot of times, you see the market stagnate and the fundamentals catch up to it over a quarter. So these storylines that we talked about last week, just wanted to point them out. They are playing out here. But the real story of today, and the story we're going to be talking about this week, is the breakout in the S&P, looking at the NASDAQ, breaking out of that 13,300 level, ultimately last week reclaiming the 50-day moving average. And now, guys, when you're looking at this is what those algorithms are looking at now. You're looking at this type of price action. You're looking at this trend. You're looking at a higher high, higher low. Now clearly establishing another higher high versus what you were looking at is all this junk before then. Now you're looking at that short-term trend. And, you know, Tim, I constantly, one of the number one questions I have been asked in my career as an educator is what time frame to look at when you're looking at the short-term trend. Mm-hmm. How many times have you been asked that question?
Oh, quite frequently. Yeah. You know,
right.
Do you look at the daily chart,
as a swing trade, like 3 months, 6 months? And I always say, guys, it's subjective. It's subjective because you have to be able to look at whatever the current trend is. And that's subjective because of pivots and time and the starting point to trends versus the ending point of trends. And, you know, I've said this in recent history regarding crude oil and the Russell 2000. I've said, hey, we need to be able to recognize when the trend is over. Well, we also need to recognize when the trend is beginning. And that's what you're looking at. And so when I'm looking at the NASDAQ, I'm no longer looking at all of this data. Yeah, I'm looking at it from okay, pivot points. That was an important resistance area. Obviously, the all-time high is going to be an important resistance area. But when you're looking at the time frame to fit the trend, you got to go to where the pivots are. And right now, you have a pivot point right here at 12,300. You have a pivot point right here at 12,750. And now you have clearly another a resistance breakout, which means the trend I'm looking at is this trend right now and not overall the intermediate trend. That's based on the trends now getting aligned. And now you clearly have a short-term uptrend in the S&P. You now clearly have a short-term uptrend in the, well, not only short-term, but intermediate in the Dow Jones. And now you also have a short-term uptrend in the NASDAQ. And like I said last week, we're closer to alignment than we have been in quite some time. And this is what happens when the markets align. Mm-hmm. You get euphoria days.
And we are having some euphoria here in the markets, obviously up across all the different indexes and holding steady and healthy through the intraday as well. That's a no sell day at this point. Look at that fat green candle. Marky, how are you reading market conditions?
Well, and I don't have anything to add to Matt's technicals is spot on. Last night in the weekend prep class with pro members, I talked about, because I'm a theme-based sentiment guy, and that's what I use to base most of my decisions. And I talked about, the big takeaway was, listen, there's always a story that can pop up, and this market is fragile when those stories pop up. But when you look at the totality of the storylines heading into April, with infrastructure, vaccine successful rollout, seasonality, upcoming earnings season, I was like, there's a lot more bullishness here than there's been in a while. And so, the general conclusion, I was like, I'd be surprised if we don't have a really good month in April. Things can change, obviously pops up. That's why you check out the huddle and follow news and come here to the halftime report to see what new stories come. But the sentiment and everything is really lined up. And then you couple that with technicals, it's really lined up to have a decent April. Now how far can it stretch on that? I don't know, that evolves, but the base storylines, the sentiment, everything, it's really just felt like, reading the tea leaves that you could have a pretty decent April.
Mm-hmm. Well,
yeah, and I certainly agree with that from a technical perspective. Obviously, anything can. I mean, tackle trading knows this, but any day anything can happen in this type of marketplace. But technically, these markets have been aligning far more closer than what has been being reported out there in the news. And you're now starting to see when markets do get aligned from a technical perspective. And yeah, the NASDAQ has not achieved its all-time high yet, but you got to love this price action. You got to love the pivot points. You got to love the breakout. You got to love the NASDAQ, reclaiming all of its moving averages, showing momentum. And you got to love it in the sense that the S&P is performing very, very aggressively, even with the NASDAQ doing what it's doing over the course of the last few days, and not just today, but really over the course of the last 4 trading days, having the NASDAQ come off that 20-day moving average with force. What do we see in the S&P? Very similar price action. You saw very similar price action. What did you see in the Dow Jones? You saw a breakout, very similar price action. And so you're not seeing this NASDAQ's playing and all of a sudden Dow's taking it on the chin. You're not seeing that play out here. You're seeing the markets align and you're seeing the markets run. And that's why I anticipate another leg up and a true leg up, not just one of those, hey, let's pop our head above for 3-4 days and see what happens. Let's see what happens over the course of the next quarter. And so I feel this is a very good place for the market to be in right now. And we haven't really started that national conversation on infrastructure, which quite frankly is happening. And for one, this is finally a conversation that I'm excited for nationally. It's finally a conversation that I feel America is ready for, even in this politically hot moment in time. Infrastructure is a unifying theme if we allow, if quite frankly, if we can remove the politics from it to a certain extent. We need infrastructure. Let's have that conversation. Finally, something that benefits everybody in America and not selected targeted groups.
Mm-hmm. Well, and we're going to have that conversation about infrastructure, the three of us on our podcast here today. I'm very much looking forward to that. It's obviously going to be a major theme for the market as we move through the month of April and then into May and even just moving forward, quite frankly. And there will be a lot of winners out of that.
Well, and unlike a stimulus that's one and done, infrastructure is one and here. And so when you think about the stimulus conversations we've had over the last year, it's always the anticipation build up into the stimulus. And then once the stimulus is done, what happens?
Well, the stimulus needs to be redebated.
It's done.
Yeah, it's done.
It's done. It's one-time payments, right? It's done. It's over. That's not the case with infrastructure. With infrastructure, what we're really talking about is jobs. And that's longer term. That's lasting. Because Tim, it's not, hey, you're going to get $1,400 and get to go buy something with it. It's, hey, listen, you're going to get a job and put something into the economy. And so it's a different type of conversation that has a little bit more a longer term lasting impact on the actual market itself. And where a stimulus certainly can be gasoline on the fire, this is the log. This gets to build, this gets to burn over time.
Mm-hmm. Well, and unlike the jobs that were gained in the month of March by the jobs report that just go there with leisure and entertainment, all that kind of stuff, infrastructure jobs are construction jobs and high-end middle class jobs, building roads and bridges, and engineers will get involved in house
It's the
construction.
roughnecks in the energy field in Nebraska.
That's right.
It's the dude cashing in at $98,000. It's that type of job. You're right. The jobs report, the jobs report coming out last Thursday and Friday, all very, very good numbers. Very good numbers. I mean, the 3-month average on job performance on a non-farm payroll is really, really positive. And obviously that's on the backs of a lot of people getting vaccinated. I mean, my goodness, guys, we just hit 4 million vaccinated people in one day. On Saturday. 4 million vaccinated in one day. This the economy, there's no debate any longer. The economy is opening up and people are getting hired, and the economy, look at manufacturing data, look at industrial data, look at retail sales data, look at almost any economic data point you want over the last 3 months. All of it's improving or getting better. I haven't seen a bad manufacturing data number in 3 months.
No, Goldman Sachs had a thing over the weekend where they said that in April and May, we may go through, they're like, in the history, our entire lives and for the rest of our lives, this might be the biggest surge that we will have or ever will see in the coming months.
And Mark, I don't disagree with that economically. I do not disagree with that. It's going to be very, very impressive. It's going to be so impressive that we're actually going to have conversations if the Fed can raise rates without destroying the stock market.
Hey, and I'm happy to be part of
that's exciting. Come on, you got to get excited for that level of conversation.
And I am happy to be part of the vaccine numbers, but on Thursday I had that look. I felt like I was on taking a gallon of cough syrup.
It was funny.
And it led to a shaving accident later that night. And I am sporting a goatee for the first time in 20 years.
I was going to say.
So they did not tell me taking the vaccine would lead to a goatee, but they need to let that out. And so this is a public service.
Let's put it into the disclaimer.
After your vaccine shot, do not shave. Let that roll for a while, or you might not like the consequences.
I don't think that the disclaimer needs to be if you overdose on Robitussin. Like that. That's not the disclaimer.
No, this was just.
I want to check the tape.
COVID-19 caused this. That's all. I want to
check the tape.
I want to see non-GAAP earnings. I don't.
Non-GAAP earnings on that one. I like that one.
Oh
yeah.
Anyway.
I mean, it's just a little bit more longer lasting type conversation, and you got to give credit where credit's due. You got to call balls and strikes, and Biden said he was going to vaccinate 100 million people. They're going to get to 200 million people plus, and America's on the path that other economic countries simply aren't. We're in front of everybody.
Yeah, delivery of the vaccine has been incredible. And I was one of those last week as well, Mark. And the efficiency of the system here that we went through in Salt Lake County was incredible.
Well, honestly, if you remove the political nonsense from it, you can give Trump a hell of a lot of credit for Operation Warp Speed, and you can give Biden a hell of a lot of credit for the distribution of it.
Yeah, it's needed for the economy to truly reopen. People get out to work and seeing it in the jobs.
You know what? So every weekend I prepare for the weekend prep class, and I go over everything to try to give our pro members, the most information they possibly can and analysis. The most exciting headline I saw was like Kong versus Godzilla did like 33 million in the box office.
Yeah.
And I was like, it just felt like that, I'll never watch the movie, it's not my genre.
AT&T, brother. Warner Brothers, AT&T company. Yeah. Go ahead.
But what it did, it was that sense of normalcy, right? That like, a movie did a bunch of money. I mean, it just felt good. It just felt good,
What was everybody's take on that? Because we all read that story, right, about Godzilla and Kong versus Godzilla come to the theaters, right?
Yeah.
Okay, what was everybody's take on that? So Mark, yours was, hey man, people are going back to the movies, just feels good. Tim, what was your take?
And it made me want to sell a put on Neck and Cinemark.
And CNK. Okay, so CNK. All right.
I had two separate takes.
CNK, okay.
I had
Tim?
two separate takes. One may not be popular. My first take is that competing services like movie theaters and streaming services that move it directly to release can live and coexist, and you can still have
It's
good
here to
numbers.
stay. That's my take too.
Yeah, that was
Here to
my
stay.
number one take. My number two take is, who are all these people that are loving Kong versus Godzilla?
No,
You're wrong. Yeah, unpopular. You just don't understand the lore
Tim's
there.
inner voice says, "I hope
Listen.
Godzilla wins."
So you bet on the dude that's been around for 200 million years beating everybody? Yeah, like you bet, like in
taking the
David
home
versus
team.
Goliath, you took Goliath?
I'm taking the home team.
Like that's what you did?
He's an old god. There, you can't
Take the
down
underdog.
Godzilla.
Like,
I don't know what happened in the movie.
seriously. Like you
Of course, Tim's
went,
rooting for
in
Godzilla.
1985, Tim went against Providence. Like what are we doing? You got to cheer on King. You got to cheer on Kong. Come on,
You
me and my
gotta cheer
daughter
on
watched
Kong.
that. But my take was very simple. There was a lot of anticipation over this, given the fact that this, like AT&T, and I believe, who was the studio?
Oh,
I don't
Warner
know.
Brothers.
Warner Brothers.
Warner Brothers.
They're releasing everything simultaneously this year, direct to their streaming service, HBO Max,
Mhm.
and simultaneously to the movie theaters. And we saw this last year with Disney, with Mulan, and a couple other due to the pandemic. And so this was kind of a test for them this year. And this is really the first wide release. And as the first test goes, this one passes big time.
Listen, people
Big
want to be
time.
entertained at home, streaming, in theaters.
I get it. But if you're not going to lose your box office and
Mhm.
gain on streaming,
That's huge.
watch out.
Yeah.
Watch out, especially like Tim. I thought you might take a step back on the American box office and just focus on the international box office.
Mhm.
They were good in everywhere. People want this. People want entertained. You know what? 45 million for Kong domestic box office.
It's pretty incredible.
That wasn't me. Guess
No.
what me and my daughter did? We watched it on HBO Max streaming. And guess who gets
Oh, you
paid?
did watch it?
Oh heavens, yes, I watched it.
I didn't know that. See, don't tell me. I don't want to spoil.
Listen, don't spoil a Kong versus Kong. Like, it's King Kong, bro. Like what are we doing? No, I honestly haven't seen the last 45 minutes, so I can't spoil.
You don't know the end either.
I have no clue. My daughter, we started watching it 2 days ago, and we haven't watched the ending, so I can't spoil anything. But I'm cheering on King Kong, and she's taking on Godzilla. It's a massive family controversy.
Hey.
But the reality is, my take here, I think this is a win for streamers. I really do. If the box office is going to come back and not hurt streaming, that's a big win for streaming companies.
Yeah, I agree. I think it can be very, very big for especially companies like AT&T.
Oh, and you know what
Disney.
it's really good for though? And this is what should get everybody excited for, because this is capitalism at work. It's good for everybody. Because if you want to sit your butt at home and pay $6 to watch King versus Kong on a monthly basis, you can do that. You want to go take the wife out to a dinner date, you can do that. It's good for consumers. It's good for the box office. It's good for the companies. It's a win-win.
Yeah, good for the theaters, good for everybody. I love it. All right, let's do sectors next if we can, Matt. One of the reasons why I'm eagerly, excited about Market Performance Day, market action today. Obviously, we have across the board, we're pretty green. There's only two sectors down. And part of the sector participation here today is that tech sector, which you looked at the NASDAQ. We're getting discretionaries to come back. But even the communication sector, which just 2 weeks ago was beaten up as it got caught up in the whole Archegos capital management thing, it has roared back off the 50-period moving average. Can you just run us through the sectors real quick, kind of give us a broad market perspective?
Yeah, we're talking about the broad markets aligning, and they certainly were coming into last week. We had that conversation all through last week. We talked about we talk about these all in real time as the market was breaking out last week. And with the breakout in the market and the markets aligning from a short-term perspective, you're obviously going to see some stabilization in the rankings, and you're going to see an upgrade in the S&P itself. And that's where we're going to start here. The S&P 500 did get a 5-point upgrade into that +2 bullish environment of the +20. And that puts you obviously in one of those leadership categories from an index perspective. Sometimes the NASDAQ is the one that's showing the courage. Sometimes it's the Dow. Sometimes it's the Russell 2000. Right now, you got to say the S&P and the Dow Jones are 1A, 1B. Even with what is happening in the NASDAQ, you got to love the last 3-4 days of price appreciation if you're bull in the NASDAQ. If you're a bear, are there any bears any longer? Like any?
I want to meet one.
I haven't met them. But if you're a bull, you got to love the last few days of price action as you've reclaimed that 50-day moving average, reclaimed your previous pivot, and now you're obviously talking about a momentum short-term based trend. But intermediate, you're still neutral intermediate. And so you still have some degree of neutrality from an intermediate trend. You got a good bullish short-term uptrend, but because you have a little bit of mix from an intermediate to a short-term trend, obviously you're going to be a little bit more hesitant in that environment than you would say with a short-term and a bullish intermediate trend. And so when you have those time frames aligned, you're obviously going to be a little bit more momentum there. And the S&P has it, in my opinion. So the S&P, Dow Jones, you're really kind of 1A, 1B right there. S&P being the barometer, I'd put that as the leader in the horse race. NASDAQ starting to show some momentum and obviously playing a little bit of catch up with the rest of the market, but you still have some intermediate resistance levels that we have to navigate. One of them is currently right where the market is. You have an old pivot point in the NASDAQ right here at 13,600. If you drop this down into that hourly chart, you can kind of see it hesitate there. Look at the good price appreciation coming into the Sunday. Here's Sunday. Here's Asia. Here's Europe. Europe starts cooking. Okay. Europe starts cooking. Here's America. America starts cooking. Here's the midday lull. Midday lull. And where does that midday lull really come into? That technical environment right there. And so you're coming into some fair, I want to say strong intraday technical resistance, but there is technical resistance where the high of today is. You reclaim that, you're looking at 13,900. Again, when you have time frames aligned, you don't have that. I'm not looking to the left of the chart saying, well, could this hypothetically stop it? Could that hypothetically stop that? Nope. Nothing stops that because you don't have anything to the left of the chart there. That's the beauty of alignment when it comes to technical analysis. Now, with the index conversation, let's take a quick peek at some of those sectors. And let's start with the upgraded sectors here. The first sector we did give an upgrade to was the staples sector. Put that right there at the 25-yard marker. Had about a 10-point upgrade in consumer staples. And that upgrade was you really didn't see a lot of price appreciation last week. You had those two really good days and then followed by a retracement. But one thing we loved coming into today was we loved this retracement. We absolutely loved this retracement. It's actually fairly rare when you get a momentum-based condition in staples. This is momentum. Look at the shifting momentum. You can see it visually. Look at the candles over here. Look at your standard type price movement. Even when you get the bounce off the 200.
Matt, will you break this down in depth? Because on the Friday meeting, you loved this chart more than any other coach.
I made an argument. I wanted to put it above the S&P.
Yeah, no, explain the technicals, because I mean, I think this is a great teaching lesson here.
Well, shifting volatility means a little bit more to me, I think, than other technicians do. When a certain technician will come into this short-term trend here, right? And they'll say, okay, you see a market go from 63 to 66 and a half. It moves up 3.5 points, right? And you see a market go from the stabilization of 66 up to 69 and a half. So you go from 66 to 69 and a half. So you move up about 3.5 points. So a pure technician would say you don't have an increase in momentum there because your pivot points are fairly equal and fairly identical, 3.5 and 3.5. So to me, though, the velocity of those candles matter. And so even though you have a similar price performance between your two pivots, this is like a rocket ship being put into outer space, whereas this is just this is what staples do.
Mm-hmm.
This is what staples do. This is what tech does when it gets excited. Staples got excited. And then look at this sell-off here. The one thing I don't like is the increasing volume here, but that's a secondary indicator, not a primary indicator. Your primary indicator is always based on price action. Look at the momentum here. Big candle, smaller candle. And so there were a couple things I saw in the staples, and yeah, Mark, I would put myself in front of the other coaches on staples. I'm a little bit more bullish on staples because, again, I think most people are still like, it's staples. What do we're still talking about staples. We're still talking about Walmart, for goodness sake. And like, we're not talking about Zoom communications. We're talking Walmart. Walmart doesn't do this, right? It doesn't do this, but you also don't have an economy reopening based on the economic factors we have right now. And so when you see this type of velocity happen, that's fairly rare in this environment, but I do think it increases the probability that the next leg will continue. And so I love this, the technical environment, again, based on the fact that it had similar momentum. I love the increasing in momentum and the vertical trajectory here a little bit more than here, which means I have a little bit more of a bullish leaning here than I did here. I love the combination of this retracement here, big candle, smaller candle. What's Marty do, Tim? Marty hit the tramp, tested the low, and then just decided to play ball again. And so Mark, it's the same conversation that honestly, it's the opposite read, but it's the same thing I was saying when I said here, I don't like this shifting volatility. I don't like this. Now, why didn't I like this? Because look at the consistency in this trend. And then look at this. This changes the dynamic of the participation here. I don't like that at the end of the trend. That to me, it spooked me. This is consistent. This is volatility. I don't like that. You take a look at staples again, though, XLP here. The difference is this is the beginning of something versus the ending of something. And so I see market participants coming in a little bit hotter here than I did here. And I think that's because you finally stabilized here, got above all your moving averages, and then the economy reopening up took hold. So there were, Mark, to answer the question, there were subtle characteristic differences, but those differences were enough to make me think that the momentum in staples was legitimate. And it's just one day coming into the week, but honestly, the ranking's justified, and it probably should be with the S&P right now. And so we do officially have it at 25, but the reason I was a little bit more bullish than others in staples was because of the shifting volatility and not based on the overall momentum of the trend. Does that make sense?
Yep, it sure does to me.
Okay. And so staples, the next two sectors that did get an upgrade, obviously the tech space, technology got an upgrade into the positive 35 barrier. And again, this is the difference in trend analysis, right? You see real good momentum. So why is technology, despite the real good momentum, underneath the marketplace, the S&P? And why is technology, despite massive momentum over the last week, still underneath? Because multiple time frame analysis. You still have pivots we have to navigate. It's as simple as that. When you're looking at the NASDAQ here, you're still, or not the NASDAQ, but technology, you're still underneath your ultimate pivot point of 139.24. Because of that, you got to be a little bit underneath the rest of the market. When the marketplace does not have a resistance level to combat with, and you have very good momentum there, when you're looking at an individual component of the market and you see the fairly similar momentum, but you're underneath the resistance pivot, you're simply going to have a different ranking. And so because you have an intermediate neutral trend with a short-term uptrend, and I'll be the first to admit the most likely scenario is those two do align, but we got to see it first. We haven't seen it yet. We've seen it with the rest of the market at this point. Technology upgraded into the positive area, positive 35. Outside, we did give the 40 ranking last week with the anticipatory breakout. We got the breakout. We moved it up 35. Look for some consolidation here. Look, especially after today. Look for a little bit of consolidation maybe tomorrow and the next day as we fight against this. But if this blows through that, guys, without any consolidation, the market's telling you something.
Mm-hmm.
If this blows through that resistance point with no consolidation, the market's in euphoria moment and we should adjust. So let's see how the technology sector specifically handles this very important resistance level at 139. Stay with us throughout the week in the halftime report, and we will be with you live when and if that does consolidate or breakout. But you do got quite a bit of momentum coming into technology. The sector that is very similar in terms of performance to technology would be discretionary, and discretionary is getting closer to alignment as well. We still kept that positive 40 though in discretionary as you're fighting through up. You certainly got pivot confirmation, higher highs, higher lows coming into the breakout. You certainly can break out here, no doubt about that, but we need to get that. We need to break out of that before I could consciously upgrade this, given the fact that you got just nasty chop all the way to the left of the chart, and the space is getting caught. There's no doubt about that, but we still have some technical things we got to navigate regarding the sector itself. Those were the three upgrades. For the rest of the marketplace, you know, we kept the rankings fairly similar. We upgraded a lot of these areas in the market the week before, and then you saw basically the week just confirmed that upgrade from the week before. So when you're talking about your three heavy hitters out there in the market, you got materials, high base, kissing off the 9 EMA breakout. I mean, I don't need to say much. You got to love materials here today. But again, you got the upgrade last week, and then you consolidated justifying that ranking. Got a good breakout out of materials today. Industrials would be that next sector, very similar type to materials. Got the upgrade last week, consolidation, justifying playing defense, breaking out of industrials. That looks sexy as all get out. And then finance there, very similar, but you have not broken out. So if I had to say, obviously, I'm always going to pick materials over finance. That shouldn't shock literally anybody if Coach Matt picks materials over finance. But I would put them as finance, I would put finance slightly underneath materials and industrials just for triggering this week. Trend, pattern, psychology, theme, all very similar, but just for pure trading perspective, I like industrials, and I do like materials this week a little bit more than the charts in finance. Energy taking it on the chin a little bit here today. Oil had some slightly concerning news coming out of oil here today, but energy taking it on the chin. But really, to me, energy is going to have this fight. We got to reclaim that 20 period simple moving average. It's going to be a battle zone. These deep retracements. This is the thing about deep retracements. Clean momentum-based retracements, a lot of times you see this. You see that pivot point get absolutely gobbled up because it performs similar to the previous price movement. When you're looking at energy in these deeper retracements, though, deeper retracements simply have deeper retracements bring deeper opportunity. You have really good reward to risk ratios, no doubt about that. But you also got some challenging technical environments that you're going to have to navigate that momentum-based trends don't. And momentum-based trends, like, people are going to complain about those too, given the fact that you got to be really, really quick on your triggers. Here, though, the complaint is it's not performing with the rest of the market. Well, There's a reason for that. The reason for that is materials doesn't have resistance to deal with. Industrials doesn't have resistance to deal with. Doesn't have resistance to deal with. Well, what has resistance to deal with? Energy does. And what is that resistance? Right there, 50, 60. So keep an eye on this. Obviously, energy had negative news today. That's what's really kind of driving it. But I also think, and this is just my opinion, but I also think it's also dealing with some nasty technical resistance levels. If these do align, that's where the euphoria takes hold. It's not here on that ultimate dip. It's once it reclaims that 20-day moving average. Same thing on the NASDAQ, guys. Same thing on the NASDAQ. It wasn't here. That was a great trading environment. It was when it reclaimed it that gave you those perfect triggers. And so for people that are like, well, I know tackle's been all over energy the last week and a half. Have I missed it? No, not at all. The real price action happens above that pivot and not the buy the dip here. And so the buy the dip is still worried about that. Well, if you don't want to worry about that, let it take it out first. And then you don't have to worry about that. Mm-hmm. And so it's going to have a little bit of a technical challenging environment, just given the fact that deeper retracements typically do have a little bit more of a challenging environment, but they also offer you the best return for your risk out there. And so that's just that little give and take there that we all do from a probability versus a reward to risk ratio perspective. Energy right there at the 20-yard marker. We would downgrade based on the price action here today. It was a lot of that justifying of the 20 was because you had support get gobbled up and because you were forming a higher level of support coming into that potential breakout. With the price action today, that would have got downgraded in my opinion. So do keep an eye on that. Right now, energy is at the 20-yard marker, but we have some concerning technical environments that energy has to navigate this week. Next, let's go into the communication space. Tim, you mentioned communications earlier, how, you talked about how it got gobbled up here in the, or caught up in the hedge fund storyline, that Archegos capital management one, right? But what it didn't ever get gobbled up in was the overriding technology discretionary growth-based storyline. It never got that. And we were talking about the positive nature the positive response we all had to Kong versus Godzilla. When I mean positive, I mean the positive response, Tim, that you're going to enjoy when you watch that show later on today, when you just remove everything and just say, I'm going to enjoy watching King Kong beating up some dinosaur.
Listen, I wasn't going to watch it. I'm going to watch it.
You're going to watch Kong beat up the dinosaur, and then you're going to watch Kong beat up the 200 million year old Godzilla. You're going to enjoy that. Everybody in society is going to enjoy that. You want to know why I know that? Because they sold a ton of movie tickets. And you know what else? I haven't even seen the streaming numbers, but I'm so excited to see the streaming numbers too. Mm-hmm. Look at comms. See, comms it has that additional thing people can now start believing in. You got to like comms. You got to love everything about the response in comms. And again, I'm not talking just the last 2 days. I'm talking about the storyline that played out regarding the growth environment of discretionary and technology. Comms didn't get caught up into that. Comms threatening a breakout, and that doesn't have to hesitate. I would love a hesitation here. It doesn't have to hesitate. Snapback's getting gobbled up. That breakout's legitimate. Comms, we did not downgrade comms. We kept comms right there at the 25-yard marker. We didn't upgrade, didn't downgrade, kept the same ranking. Look for that breakout. If that breakout happens, you're putting it right in with industrial. You're putting it right in there with basic materials. You're putting it right in there with finance. But let's see it navigate that 7660 breakout. But you got to love the action that's happening in the communication sector. And then let's take a quick peek at some of your defensive sectors. Utilities breaking out after a consolidation. Utilities should see a little bit of action here this week. but it is still utilities right there at the 40-yard marker. The breakout was the 40-yard marker breakout was anticipatory. We were anticipating the 9 holding. The 9 did. We got the breakout of the horizontal. That happened. You certainly can anticipate utility appreciation here, but it's still utilities. So not a lot of good trades happening in utilities. Healthcare kind of stuck in the mud from overall intermediate. Not a lot of great setups here in healthcare either. And then last, certainly not least, let's go to real estate. Real estate threatening a breakout on Friday, playing a little snapback defense at 40 on Monday.
Love the sector roundup, brother. Appreciate that as always. Every Monday we go through the sectors one step at a time because you're starting the week from a top-down perspective. You can get all sector analysis and market analysis, by the way, in our weekend reports, in our newsletters and those kind of things. But Matt, fantastic job. Let's quickly run through commodities if we can. And Mark, come on in here and help us with each of these. Crude, gold, the dollar, Bitcoin. Mark, what are you seeing in crude oil first?
Well, I mean, we got a short-term consolidation pattern over the last 2 weeks. Pretty clear support and resistance areas on that pattern. There was, a little bit of news that, today was this OPEC is easing. It was one of these known news stories where OPEC Plus was going to ease their output cuts, but it was nothing dramatic and it was fairly expected.
Wait.
Right now,
Did you just say Putin selling calls?
yes.
Okay.
I did. So basically, from a technical standpoint, we got to navigate this range, and it's a pretty wide short-term range for crude for a 2-week period. Clear resistance areas, clear support areas. See how it performs there. If support doesn't hold, that's a little concerning. If support doesn't hold, that's a little concerning from a technical standpoint because we really don't have a lot backing up the support level. So I'm very curious, probably going to get a support test here in the next day or so. Let's see how it responds to that support level. If it doesn't, algos might pick it up at a weekly moving average or something else. As far as oil, I'm sorry, I believe oil is epicenter from a thematic standpoint. Got that rising 20 there. That's nice, actually. That's really nice, actually.
It's got, this is the thing, Mark. Even if short-term support fails, and it certainly could, there is so much support.
I love that rising 20 underneath that.
And one of I kind of feel like I've been on an island with crude, being like, stay away, like from the buy. I've called it the trend. I literally right here said trend's over, guys. Shifting volatility, trend's over. I've said it's a cash flow environment, that energy's the play, it's not crude oil. A lot of that argument is based on stabilization, correct?
Mm-hmm.
It's the stabilization argument. And stabilization is not 57 holds. Stabilization is the average price of crude goes up over time to stabilizes north of 50, which means American energy companies can still be very profitable in that environment. And so what I like about that argument is, even though energy and crude's are always going to get caught up in news storylines, correct?
Correct.
The exact same way, correct?
That's why I like crude so much.
Yeah, they're correlated that way. And so obviously energy performing today down about 2.6%. Crude oil itself, what's crude oil down about 5.2%, right?
Mm-hmm.
So they're both going to perform negative on those days, the same way they both perform positive on good bullish up days, right? They're correlated like that. But energy doesn't have to go down 5% if crude goes down 5% here. And that's a little bit of the stabilization here. If crude was down 5% here, I'm willing to bet energy's down 5% here. But the stabilization is this. Even if this short-term support fails at 57, you have about 14 different very important support levels between 50 and 55. The range of support is all the way from here to there. That's your true support level.
Mm-hmm.
Anything can stop it there. And so as long as crude stabilizes above 50 over time, and the average price of crude over the course of quarters goes up over time, which in December, I believe it was in the $47, $48 ballpark range. Obviously, it's going to be in the 53-ish, 54 maybe even 55-ish ballpark for the first quarter of this year. That's not going to change if support fails at 57 and it finds support at 55.
No, by the end of the month, energy companies are going to report profits for the first time in a year. That's what's going to happen.
And Tim, that's what people are going to be focusing on.
Yeah.
No, and I really feel strongly about what I'm going to say. I really do believe there is a stretch, and I've said this several times recently. I think there is a stretch because you've had one of the things weighing on oil has been the negative COVID headlines out of Europe. They are going to get their act together on vaccine distribution. That process is going to go. And I think between that and positive vaccine distribution numbers here, and then a few of those like feel good stories, Disneyland full, this and that, I think the entire epicenter place, and I think oil is at the center of epicenter, is going to have a really good stretch. And as such, I'm a big fan of buying dips in energy stocks.
Any analysis that starts with Europe's going to get their act together, I'm usually a little hesitant on. Just slightly. Just
listen.
Europe getting their act together is a 70-year-old storyline for me.
Europe better get their act together. They're going to miss that tourist season.
I think they're going to miss it. Go
miss that tourist season.
Go tourism in Florida. Go to Texas. Hell, go to South Dakota this year. It's going to be better than Europe.
Dude, the canal.
You're going to get out more.
I enjoy Mount Rushmore, but come on, Europe's an amazing place to visit.
Just call it like it is. Even if you're
listen, I'm not going to go to Paris to hang out in the hotel.
No, you're not going to go to Paris to hang out in the hotel. This is true.
But I am going to go to Dakotas to do something in the wild. My point is, I wouldn't be betting on Europe getting their proverbial blankety blank together from a vaccine distribution perspective. I mean, I'm sorry, looking at American data versus European data versus Asian data, it's not close.
Europe's been lagging.
Even if Europe doesn't get its act together, you're buying energy dips, Mark. I believe.
Yes, I'm buying energy dips.
Oh, could you? If crude goes to 50, Mark's got a standing order.
Yeah, absolutely.
It's called the naked put. He's already sold it.
That's right.
I mean, there are very few things that I feel more comfortable on than reopening plays that dip.
Well, and the beautiful thing about the stabilization argument is even if energy stabilizes, they dividend and cash flow. I mean,
yeah. I can't wait for the corporate earnings later in the month. I agree with that, Matt, 100%. As the prices have gone up into the 50s and into the 60s, now we're 58.
Well, can I ask you guys a question? Yeah. Not even a year ago, but 6 months ago, before the election, all of us were wondering if ExxonMobil would cut dividend and when all these energy companies were going to cut dividend. I don't think anybody here is worried about them cutting dividend right now.
Nope, not their CEO, by the way.
So if we make it as simple as this, 6 months ago, we were worried about the health of the company. Now we're not. That's a buy to me, guys. I'm sorry. It's as simple as that. Last year, we were worried about if Exxon was going to cut dividend, if Chevron was going to cut dividend. This year, we're worried about stabilization arguments. I mean, yeah, it's a buy for energy for me.
Yeah. And Exxon is one that I'm very anticipating. I already own some shares, but I'm actually looking to pick up a little bit more. The XLE has
officially the buy at tackle trading was here.
That's right.
That is officially the buying at tackle trading.
Oh, we've been buying it throughout though.
So when we say it's still, it's this. It's still a buy.
Yeah.
Welcome to tackle.
And that 50-50 trigger, the clarity of it is something I really like. The relative strength against the oil sell-off, I really like. I love the analysis here, guys. Very good job. We got to move through commodities, though, because I do want to get to stock talk. And we got trash that makes cash a little bit later
He's
in the
got to
show.
get through his list, Mark.
I do,
He's going to
absolutely.
have a heartbreak.
Gold,
Heart attack.
Doji, nothing there to add to the analysis from last week. Anybody want to add anything on gold?
I just love how it stuck. I mean, gold sticking the support level in fierce downward short-term momentum, because those were two big red candles for gold last week, and it came down to support and stuck it. That was very telling to me.
Mm-hmm. And the GDX higher pivot low, that relative strength that Matt detailed with Coach Tyler actually on Wednesday and Thursday as well, kind of going through some of that math and the charts there, Matt. We love that GDX reversal potential that it's moving. Now it's pushing towards a resistance level as well. So it should be on people's radar.
It absolutely should be on people's radar, unless you don't like money. If you don't like money, then no, it shouldn't be on your radar. But if you do like money, it should be on your radar. And it should be on your radar for a couple reasons. Number one, the pain was never as bad as it looked here. Number two, look at this. Increasing support versus where it was. Increasing support. Number three, you're now in the zone of that resistance level, right? We reclaimed the 50, increasing support 0.1, reclaim the 50.2, horizontal breakout, give it a 34 to 35. Let's reclaim that level, and we should be bullish uptrending at that point to the 200-day moving average. We'll see it, but that's the way the price action is telling me.
Yeah, I see it as well. And obviously a little bit of clear air there if we can get that reversal. I love these.
Listen, the only thing you got to navigate between now and the 200 is really, there's only 2 points you got to worry about between now and this little green line here. You got this level of 34.40 and you got that level of 36.
Yeah, but I'm not approaching gold GDX. I don't think you are either as a trading instrument here. I actually like it as an investment.
No, it's not a great swing trading environment. I'm just saying that the levels it needs to reclaim in its longer term trajectory of dominance as we get back up into the all-time high stem. No, I never analyzed gold or gold related instruments as a swing
Listen,
trade.
GDX can go back and forth between 32 and 35 for the next 10 years, and I'd be very happy.
It's not going to do that.
Well, I know, but that's the thing, I mean,
even if it did, you can still compound that dividend, write covered calls, and retire. So, yeah, it should be an instrument on everybody's radar.
No,
GDX has too many things of what you can do with it. It's got the gold kicker. It's got liquidity. You can do any type of option system on it. Yeah, you got to love GDX. It's one of my favorite tradable instruments.
I agree. And I agree with the idea that even if it hits those resistance levels, stalls a little bit, you can write those calls. So that is a wonderful product for that cover call system, 100%.
And the thing about it is, it doesn't have that. And Mark, you're going to have to adjust your eyes, but it doesn't have a 1 next to the 33.
Listen, you got to deal with what you got to.
It doesn't have a 1.
Listen, everything doesn't have to be an exciting. Listen, I've been reverting the last couple of weeks in my trading.
You can still get 2.5% non-margin here.
The covered calls in gold trading instruments are actually decent.
Some of the best in the world.
They're actually really decent. It's a great
but
energy stocks too. I mean, that's one of the reasons is it has low volatility, but the returns are decent. So
is this Mark's intervention? Writing a covered call on. Is this his intervention?
I've got prayer hands going on over here.
Mark,
I'm like, what did I hear here?
Mark, hey, can I sign you up for a 31 strike naked put?
Well, I already added to gold positions today, so I already hit my.
Don't you ruin our moment. Listen, you can get 9% return on it. Now, Mark, hold on. 31 is right here.
You buy at support if you get stuck.
If you get stuck, bro, you got a good backdrop right underneath that.
Oh, you know what? So 31?
31.
All right, fine.
Not 30, not
I just sold it. That's
not 30.
I sold it.
Dude, he might be back. He might be back.
I sold it.
He sold a naked put on a stock that did not have triple-digit implied volatility. Maybe deep value's back.
We're going to be doing trash that makes cash in a few minutes.
Deep value's back. No.
Listen, and you know what you're going to see in my trash that makes cash? A bunch of gold mining and a uranium stock.
I see.
Deep value's back, bro.
Oh, listen, I sold naked points on charge point electric vehicles.
I take back my statement
last week. So, like, you know, I'm looking at FUBU right now.
Oh, goodness.
So
don't ruin this moment for me.
I sold the 31. I like it. I'm sorry. I love how gold stuck that support level. That's a reasonable return on the
well,
margin
Mark,
allocated.
you just had your intervention. Janet Yellen's having a different type of intervention with the rest of the world today.
She's trying to, you know, she's laying out an argument.
Got to have that conversation.
Yeah.
And Godspeed, Janet Yellen. You have a massive, massive, massive responsibility. And if you nailed this one, you could become historically known as our version of Cleopatra, Janet. That's what you have. You have the historical ability to be our version of Cleopatra if you can get the entire world to stop the race to the bottom. Mm-hmm. Good luck. Godspeed. Massive failures in her future.
Yeah.
But you got to appreciate the effort.
She's going to try. Countries will not always capitulate, but a lot of the major trading partners.
Are you kidding me? They'll say yes and won't do anything.
I know exactly what's going to happen. But
okay, so just for those of you not to give my comments some context, mm-hmm. Janet Yellen is given a speech today targeting the G20 on corporate tax policy and ensuring that the G20 works together instead of competing with one another, have certain what would you even call them? They're not laws, bylaws, certain requirements or
like agreements almost.
Minimum standards of corporate tax policy. And so in this massive race to the bottom that we started 12 years ago, Janet Yellen's trying to find a way out of that. So Godspeed, Janet. You have Tackle's approval on that one, but I think what she's going to run into is a lot of the world saying, yeah, Janet, you're right. And then a lot of the world saying, we're still going to do whatever we need to do.
Well, a lot of the world's going to run into a problem they've been facing for a long time. That's the U.S. dollar is the #1 global currency. So there is some sway that we have here with that, kind of instrument with the dollar.
Oh, no. There's some sway that Saudi Arabia can put on Russia. Like there's some sway.
Sure. Let's move on before this goes into Saudi Prince argument somehow. Quick look at the dollar and Bitcoin aren't doing much here today. I don't know if you guys got any.
Listen, Bitcoin.
Sure, go ahead, brother. You tell me what you got deep on Bitcoin here today.
Listen, I have been waiting to add exposure on the breakout. It was so hard not to add exposure on Thursday because it's like, oh, you're heading into a 3-day weekend. And over 3 days, I mean, Bitcoin can do anything, right? It could have been at 70,000, could have been at 40,000. You don't know over those weekends. But I was like, you got rules. You're not adding any exposure till it breaks out. So I want to hear Matt's take on the probability of a breakout here.
This week?
Yeah.
This week? I don't love the Sunday action. There's nothing I like about that. I thought everything was lining up. But what did we say last week, Tim? I still maintain.
Line in the sand. If it holds the
line in the sand is right there.
Yep.
And that line in the sand was not violated. And so, we made this comment last week, 58,000, 57, 58,000 in that range. I still think you're lining up for a potential really, really clean breakout mark. And quite frankly, honestly, I wouldn't worry about 61,000 here. If you're looking to buy, I think you're adding intraday above this pivot point at 61, not 61K, 60,100. I think if you're looking to trigger, Chucky, you're triggering intraday here and not worrying about that. You're adding here. You're triggering here. You're adding here, in my opinion, technically.
Give me /ETH real quick. We never do
Basically, Mark, all Mark heard was, so I can sell puts on right. Okay.
Well, Mara's my favorite, but dang, Mara's went crazy.
Yeah, it's gangbusters.
I've been saying this in my shows and stuff. I like Mara better than any of the other miners a lot. And Mara's breaking out ahead of Bitcoin, so I don't like that.
I know why you do it because you use the options around those companies. But just for anybody out there, if you're still looking for exposure to Bitcoin or cryptocurrencies in general, you don't have to be dependent on stock market open and close. You could have been trading this all weekend long at any crypto exchange that there is. And if you take a look at ETH real quick, and I'll let you get any
do you
points you
guys
have in there.
catch the news that the CME is going to have micro Bitcoin contracts?
Yes. Yeah, we talked about it a little bit on Thursday.
Yeah, 1/10 of a Bitcoin. I love that. I will go to trading those over if liquidity is there over miners. That will be my new trading instrument. Those micro Bitcoin ones.
It will in time. It will not right now this time. You say that it's not there till the liquidity's there.
Yeah,
it's not. It won't be there till the liquidity. But yeah, man, Bitcoin's popular.
But but how long has Bitcoin been in the futures market?
I get excited about any
December
announcements.
18?
Yeah, with
Right?
adoption
December
like
18?
this. I mean, the futures market for Bitcoin is more for the ETF introduction later in the year. And I believe micro futures allow people to kind of price things differently for institutions and Wall Street to get involved. I still will always maintain the best way for any individual to get Bitcoin exposure is through a direct Bitcoin exposure. And that's opening a Bitcoin account, opening some kind of an account with an exchange that trades Bitcoin. Because then who cares about micros? The micros might still margin at $5,000 for the contract. That still could price out some people. If you want to play $50 worth of Bitcoin, you can, in a Bitcoin account, Marky. So,
well, I know, but I don't have option strategy. I don't have option strategy. I have zero desire to trade anything that doesn't. So
no, and I get why you need the options. And that's why a lot of institutions love the futures market around cryptocurrency, because they need the options as well. And one thing I was going to note on ETH, Bitcoin here hesitating, looking like it's going to break out, still holding the intraday line in the sand. Ethereum, the second largest cryptocurrency in the world, it broke out already, kind of, showing a little bit of the pathing as to what crypto markets are doing. And even the beaten down Ripple has made a pretty amazing comeback in the last month as well. So crypto markets are pretty healthy right now, and Bitcoin's threatening a breakout. I think if you're focused on this market, you will be focused on that breakout this week.
Listen, yep. If you don't like Ether, get ready for a lot more Ether conversation, because Coach Tim loves Ether.
Well,
and
no,
that goes
you know who else
back
does?
Years.
Yeah. Mark Cuban, he mentions Ethereum once a week. Like
I own more Ether than Bitcoin.
He owns more Ether than Bitcoin.
Yep.
No, it's almost to the point where it has to get into your mainstream whenever you discuss crypto discussion. So
for crypto people, it has been for a long time, obviously, and I think it is starting to get that adopted.
5 years, 6 years.
5, 6, 7 years. Yeah. That's right. Not a lot of economic data this week, like you mentioned.
I too am excited for the minis, though. I think minis are good. Minis are good.
Give me an ETF. Come on, SEC.
Just finally, how do you do minis on futures without an ETF? I'm scratching my head here, T.
That's right.
It's coming.
I don't get it. It will happen.
I know, but how do you not do it? How can you not? I would like to hear from the SEC how they could justify a minis futures contract, which is leverage on leverage, but not an ETF that's standardized margin. Like this doesn't make any sense. Like SEC, we know you got paid. Just give us our product now. We don't even care how much you got paid.
I didn't hear this from Terrence. It's interesting. I'm with you 100% on the SEC, and with the applications we've seen over the last couple of months, I do believe that ETF exposure is going to be coming down the pipeline.
Oh, I'm excited to start breaking down some Ether technicals in the halftime report overtime.
Yeah, I agree. We've got some stock items, actually, guys, that we do not want to skip here today. There's actually some interesting stuff in the news. Then we're going to get into trash that makes cash here in just a minute. Marky, I believe you got a couple picks for that, right? I brought one. We'll take a look at that here in a minute. You guys mentioned GameStop. We'll go through a couple of these pretty quick. You tell me which one's grabbing your attention. GME is going to issue up to $1 billion worth of stock. Stock started to sell a little bit. It's rattled back, obviously cashing in on the volatility, the upward price mobility. The company needs money too. There's still a is beleaguered the right word, Marky?
I
came to my mind.
I have a feeling that the CEO wants a paycheck.
I'm guessing they all want a paycheck at some point. Yeah, and they are going to cash in.
Hey guys, for those of you new, and I'm not talking to Team Tackle, I'm talking to the world. You don't gobble up this dip when a stock just offered $1 billion against their market cap of 13, which is all fairy tale dust in the first place.
Yeah.
Like,
exactly right.
What are we doing?
Read the news here.
Read the freaking news, guys.
Read the tea leaves.
Let me increase my liquidity by 9% and have the stock go up. Like,
well, it could. Who knows what is going to happen with the stock in the short term?
Well, I get it, but this is a $500 million company that just is offering a 500 real. I'm talking real. Okay, that just offered $1 billion worth of shares.
It is surreal when you put it in that term, in those terms.
Come on, guys. What are we doing?
I mean, you think about, if you went and found another $500 million market cap company and said, we're issuing $1 billion worth of,
this is surreal. This is a moment where you need to look yourself in the mirror and say, who am I? That's what this is. This is insane.
I got naked puts at $15 in July.
You're not getting put that stock.
Next, Tesla, another obviously very popular company for years and years and years and years. It's exploded. I actually like the technical pattern that is developing here. It's not quite there yet, but a little bit of a W pattern in there. They reported that they delivered the most vehicles in a quarter, for quite some time, actually topped expectations on this. They also shifted production into different specific types of vehicles to get more efficient. I think they moved away from one of their SUV models. The Model S sedan was the one that they did not produce any more of as well. They focused on the Model Y, the Model 3. People who are Tesla fans will know more about that than I do. But technical pattern here, Matt, I got to ask you, is that setting up for a potential trade?
I think it is. I do think it is. It's been a volatile, nasty little juggernaut, no doubt about that. But, when you're looking at, what was that? It's ARKK?
ARK, yep.
Yeah, ARK. When you look at the ARK Innovation Fund, you're seeing a very, very similar technical pattern here. What's the key difference? The key difference is Tesla's outperforming it, which means if you believe in ARK coming back up, the disruptive innovation type movement, if you expect that to be a little bit of an overkill here, you got to love Tesla. So once again, all you got to do is look at here, look at the V shape, look at the horizontal support. Where's Tesla at? It's right here. It's right there. Where's ARK at? There. So again, the key difference is Tesla's fighting against that horizontal breakout versus ARK down here. And so you're talking about an area of the market that is performing almost identical to what is happening in it is the leader of this space, right? Difference is Tesla's fighting that breakout at 130 versus ARK is sitting here at 121. And so, yeah, if you think this, if you like ARK, if you like anything in this space, this is to Chucky. If you like anything in this space, Mark, you have to love Tesla. And so if you mention fishies today, you are.
So the news
really
story is a car company sold some cars. Is that what I'm supposed to get excited about?
Yeah. Wait, hold on. Since you hate Tesla, a car company, that car company sold, hold on, 17,000 more cars than it was expected to sell. The expectation was 168,000 deliveries. They came in well above that at 184. And you can say all you want about this little car company, but that little car company delivered more cars than they were expected to do, which is typically a good thing for the car company's stock value.
Which means the valuation by any.
Which means if you say anything about Chico Foss, you're really saying something about Tesla, and that's what I really did here. Is to make sure that if anything Mark said anything Mark said about anything in the underbelly, which is all looking like this, then what he's really saying is something positive about Tesla. So now say something positive.
I want to listen. There's Tesla in the underbelly, the whole thing. Listen, take off Tesla, get the underbelly kick, because the market
take
is
off
strong.
Tesla, you don't have an underbelly. Oh, you hate the king.
Let me see if I can
That's
get
all
Marky
you
here.
do. You hate the king and you love the court gesture.
Marky, $93 for the 46-day 300 strike naked put. It's a 3% ROI on a 1 delta.
What is it? What level?
300 strike.
Not a chance.
Now do the same thing on Chico Foss.
Let's go do it on Fishies. Fishies fight.
Fishies
I
fight.
don't literally like. Here's Chucky, who loves the underbelly. The leader of the underbelly is the techno king and his master of coin. Literally, the leader is. And Mark's like, I just don't like the leader.
Tesla's too shiny for underbelly for Mark. He doesn't like it.
It's
He needs fishies and he needs Chico Foz.
No, but Tesla's what he wishes every one of his underbellies look like.
I know.
No, because if it got that high, I couldn't chase him anymore. You know, if they're that overvalued.
You can chase anything down the street.
I tried, Tim. I tried to get him to say something positive.
Listen, the last time I
did
sold
all
a
my
naked
lawyer
put on
tricks,
Tesla,
everything.
I did. I go back last August. I sold a naked put on Tesla at 127 and got like $100 for it on that dip. That's the last time I've sold a naked put on.
Yeah, the 300 is the same trade today.
Dude, it went up 300% after that. Like, do it again. Let's go.
Same trade today.
Do it again.
I didn't want to own it at 127. Like, I just was like, this is a good trade.
All right. Well, so what could be?
Can I just get one more Chico Foss, please?
Chico Foss.
Okay.
A couple other quick ones here.
Can we please just get into trash that makes cash after his hatred of all things Tesla?
There's a couple I gotta get to. There's a couple that I have to get to. The others we can wait for tomorrow. We can get to them later. A couple real quick ones. Google actually won a Supreme Court case today against Oracle. This is a long-standing case. It's the reason why you never get worked up about lawsuits. They lost the appeals court case a couple years ago. Ended up going to the Supreme Court. Google won it. Part of the strength in comms here today. Google was on our option report as well. This goes back to some code. Yeah, around the Android systems and all kinds of stuff, some code. I didn't get into the details of the case. I haven't read the majority opinion or anything, but it was a 6-2 verdict from the Supreme Court. Came down in Google's favor, breaking out. You have to love what this is showing you for the market, communication sector, and yes, even Google here today.
Well,
Matt, any thoughts on that one?
Now, remove this candle here. This is what we were looking at coming into Friday, and Google was on our options report over the weekend. Love this horizontal resistance support level at 2,000. Love the horizontal resistance level at 2125. You know, you gotta love as that 90 EMA caught up to it, the momentum that Google picked up here, and then obviously you got the breakout on the news. But quite frankly, honestly, I still think Google's doing this without the news.
Yeah, I think it was going to break out no matter what.
We had it on our report. We had it on our report before the news.
News broke out after the market opened. It was already breaking out.
Yeah,
absolutely.
It was already breaking out.
This just isn't hurting it at all either.
Yeah.
All right.
Fuel to the fire.
No, I really like the FANG type stocks moving forward. Remember, like last
we haven't done a FANG.
FANG tomorrow with
Let's do a FANG. Let's do a quick. You want to do a quick FANG?
Oh, I mean, go look at Facebook. Go look at that breakout level that Facebook.
Do you not have good trash picks today, or what? What is going on here?
And also, Mark, like go look at Facebook. We did. Facebook's on the option report on the breakout of 300.
You know, I talked about this a little bit last night in the show. I just like big cap tech, and I like that Facebook breakout. I like
Facebook was also my pick for the Queen last Tuesday, mind you, on this.
It was.
So yeah, we've been all over the Facebook one, but you got love, and we even said last week, hey guys, a lot of this market is doing what it's doing without Apple, without Amazon, without Microsoft, without those big dogs. And I believe, I can't remember if it was me or Mark or you, Tim, that asked the question, but one of us asked the question, what does the market look like if these support it? Yeah. Right? Well, you're seeing at least one day what the market looks like with the support of the big dogs. Look at Google today, look at Facebook, look at Apple, still hasn't supported yet. Look at Amazon, finally starting. Nice, that's actually really nice on Amazon. Look at Microsoft supporting it. Honestly, out of all of them, the one that needs to catch some love is Apple. But do we really anticipate Apple staying down here if Microsoft's going to break out of its all-time high? If Google's going to break out of its all-time high? If Amazon's going to break out of its cluster of moving averages? And you know, Mark, they say neutrality, moving averages and neutrality doesn't matter, right? You're right. In this neutrality, it doesn't. This is now a bullish uptrend that just reclaimed and broken out of. Different trend, different pattern coming into it, different volatility. People that are looking at this saying, oh, it's just back to neutrality. They're wrong. 100%, full stop. Amazon's going to ding up into these highs. It's going to happen. Just give it time. So now you have 4 of the 5 FANG lining up, triggering literally today. The last is Apple, and I fully expect Apple to pick up the pace.
I agree. And, that FANG flash right there kind of gives you an idea of what this market's potential has here.
And again, one day on a daily chart in an overall wide range of neutrality, you look at this, and you're like, this is nothing. I could be wrong. I doubt it.
So
like it.
Now we have a disconnected Mark. He didn't want to do trash picks today.
He didn't.
He avoided it the whole time.
The entire time, he's just trying to say, oh, let's go look at FANG. Like, Mark, let's go from trash to FANG, which is the ultimate blue chip play.
Right. We're getting ready to do trash picks. He's like, why don't we take a look at the FANG stocks
or hey, Matt, why don't you do a deep dive on Bitcoin? Like, let's do what? He didn't have a trash pick.
While Mark is gone, I bet he'll try to pop in a minute. We'll give him a second.
It's funnier if he doesn't connect and we just all assume that he just ran away. like he's the dude on Monty Python. Run away! Like just
brave Sir Robin ran away.
He ran away. He ran away.
He bravely ran away.
Away.
I can't remember the rest. Like he tucked his tail and he went through the woods and he
That's Mark.
Monty Python references on a Monday. Tells you a lot about where the markets are today. Gives me a chance actually to do something I wanted to do today, Matt, because some of the names grabbed my attention. Why don't we flash through a couple upgrades while we wait to see if Mark does pop in the next, we'll give him a couple minutes.
We did have a couple good upgrades.
Some big names. Well, names I'm interested in, I should say. Roblox.
I know.
Roblox initiated as a buy at Goldman.
Initiated at a buy. Of course you did, Goldman.
If I had to initiate, I'd initiate a buy. So 100%. I'll say that. I want the earnings report.
I would not have initiated. I wouldn't have initiated yet. But if you are going to initiate this early, it's going to be a buy, no doubt.
That's not the only place. It got a string of stuff. Morgan Stanley started it at overweight today. Bank of America started it as a buy.
Oh, you think their buddies called each other over the weekend?
Yeah, no kidding. All of them, it was just like, what are we going to do with Roblox?
Hey, did you guys hear Goldman's going to upgrade Roblox? What Goldman is?
Got to do it.
We got to do it.
Yeah.
I own 100 shares of Roblox. Roblox is one of those companies that I root to lose money in the short term.
Oh, that's
because I would love to add more at much cheaper prices, but I love the company. I got 100 shares myself. So
that's conviction though. Even if it does go down, Mark wants to pick up
more. That's as convicted as me saying it's a buy and hold for the next 30 years. Like that, you just got to understand Mark's language there. Mm-hmm. I think we're premature. I'd like to see an earnings, but my belief in this company long-term is
I'll give you your earnings. I've spent like $300 on gift cards in the last 4 months on Roblox for my kids.
Okay. So, that's a fun game. Everybody at Tackle Trading, of the total percentage of cards you bought for presents, birthday or Christmas, mm-hmm. How many of them were Roblox?
It's number one as far as
it's number one for me.
So
can you use an iTunes card on Roblox?
No, iTunes you can use on iTunes.
Man, I bought iTunes more, I think.
I'm willing to bet that changes.
It probably will. But
your daughters didn't like that gift.
They told me they did.
Oh, your daughters complained to my daughter about how my daughter had Roblox bucks.
I see. I didn't know.
My daughter had to buy your daughter some stuff on Roblox. You're buying the next one.
I gotcha. I assumed it was a very well received gift. Nobody said a word, so I had no idea.
I got the backstory.
All right, Marky, you're back. Trash that makes cash. It's our weekly
I was a little
segment.
Elon Musk got mad. He destroyed my internet.
We were a little worried. You stuck us.
Set it up though, Mark. Explain the segment here.
All right, try some extra cash. I mean, I have fallen in love with small cap stocks since last November, December. I've really enjoyed diving into an area of the market that I follow, but not as religiously as I do now. I love small cap stocks. I think they provide some opportunities, and I love some of the cheap stocks. And the one thing, it hasn't been a hot market like it was in December and January, where under $5 stocks, the best performers out of all of the market, under $5 stocks, December and January. It's not that heated market right now, but that doesn't mean there's not opportunities. And so you're always going to have your like, hey, what's Apple doing? What's Facebook doing? What's industrials doing? What's oil doing? It's just really, I've really loved having it be this little pet area of the market because I really do think there are opportunities there. Like Matt's pick on rail 2 weeks ago, which I'm still happy with, which is no longer under $5 because it was such a good pick.
That's because that's what I do. I make penny stocks, non-penny stocks.
You do. You made penny stocks, non-penny stocks. And so, since we're not, back in December and January, it was smash the buy button and everything worked. This is very much a stock picker's market around everywhere, right now. And penny stocks are no different right now. And so I'm really trying to focus on things that I really do believe in, things that I believe can be profitable. First one I bring up is one that I brought up twice before. It's UEC. I brought this up a couple weeks ago. I really love the uranium story. And what I love about uranium as a whole, and I've been pushing uranium for months and months and months now. Now, the reason I'm bringing up UEC again, aside from a potential breakout scenario, is that last week, BMO Capital Markets and Morgan Stanley say that they expect a rally in the spot price of uranium over the next couple years. This is on the heels of a lot of other banks that have had bullish outlooks for the uranium sector. I haven't seen this much chatter on uranium in 10 years. Uranium's been in this beaten down market for a decade. And there is a lot, and there continues to be, whether it's Big Short, Michael Burry, or what seems to be every bank on board now. And the spot price of uranium moved above $30 per pound for the first time this year, last week. So there just was a string of positive news stories surrounding uranium last week. CCJ is the biggest mining company, a company that we have on our dirty, sexy money list, setting up with its own nice little potential breakout. And the weekly chart's so much prettier, right?
The weekly charts on all these volatility type plays are much easier to read.
They are much easier to read. They are much easier to read. And that's the thing you have to understand about penny stocks and uranium specifically. Some of your classic momentum-based patterns, they're different. There's just a lot of like day-to-day volatility that can create. But when you smooth that out on a weekly chart, it's not so shabby, right? It's a much smoother read of the price action this year. And so UEC, which is, one of these stocks, and Tim brought up triple, quadruple U's. I would have brought up that one today for diversity, except it's no longer under $5. So it doesn't qualify for our segment. But I like exposure to uranium, and for individuals looking in the penny stock land, UEC, give me a technical read on UEC, Matt.
UEC,
because I love it from a thematic standpoint. I love the volatility. I love the option premiums. It's treated me well. Give me a technical read on UEC.
All right. The question I have for you to start this off is: do you care at 367? Like,
I don't care at any
price. Care at 367, then everything stops because that's a resistance level that we may have to be concerned about.
Do you wick or not to wick?
The only way to know that to wick or not to wick is to go look at the data, and that I don't care about very much. Slightly, Mark, but not very much. Now, looking at it from a pure technical environment, it's a little difficult because we're talking about a penny stock, we're talking about uranium, and we're talking about an underbelly that can fly, right? Now, when you're looking at this here, I'm looking at this as a bullish uptrend that was a consolidation pattern here. Okay. So my consolidation pattern is right there. I'm deleting. I don't even see that on my chart. You see this, Mark? You see this? Cover it up. Put your hand on it. Like literally, I'm not kidding. Put your hand on it. Make sure you can't see it. Now look at it. And if you now look at it, you see this as a breakout on Friday with the continuation here today. And you look at it from an intraday perspective, and you drop this down into a 5-minute chart, you drop it down into a 15-minute chart, you drop it down into a 30-minute chart, you drop it down into an hourly chart, whatever you like. And what you're going to see is you got a 364 breakout that is going to be your channel there on momentum. So if you're looking at this candle here, then there isn't a technical trade here. You're too tight against that. Now, and I'm not kidding, guys. I took my hand and I covered that wick up, and I saw a very clean trigger here, continuation here, followed by continuation there, which means I don't care about that. I like this as pure momentum above the high, discounting 367 above 364, pure momentum with a stop loss underneath 34.
There's huge momentum there. I got no problem. I always have a hard time on these uranium plays because I'm just like, all right, why not just play CCJ? So that's part of where my head is, but that's not the game. That's not the premise. I do get it. I love the momentum. And Mark, you know what's interesting about this one? Just one quick thought. Mark hates it when prices go up. But when he says, I don't care on uranium, he believes in the theme enough to play the momentum on it. That's telling to me, knowing my brother well enough as well as I do. Mark, you firmly believe in this uranium theme this year. Is that right?
Well, not just this year. Uranium has had a supportive backdrop for about 6 months now, and that is without a commitment from a major government to push the nuclear theme. I believe in the Michael Burry argument that, listen, as it is a matter of time, there's nothing cleaner than nuclear power. It's an eventual. You get far enough away from the Japanese nuclear disaster. I buy that. I buy the sentiment. Uranium has felt for months.
Are you talking about the Fukushima reactor from 2011?
Yeah, I mean, and uranium stocks, I mean, if you go to CCJ on a monthly 15-year chart, I mean, it is just barely breaking out of the price action from where it was. I mean, so you're dealing basically back in.
Was it
December,
Fukushima?
I don't remember the name of the reactor. That sounds right.
I think it was Fukushima. But I mean, you're basically in December and January are dealing with a 10-year breakout of price action.
Yeah.
And so when you're dealing with a compressed area of time where something's been beat up that long, you know, just because I'm a few months into the trend, I mean, there's a lot more room to go.
By the way, that's potential right there.
Mm-hmm.
So I think there is there's room to run, and that's why, like in uranium, I love the pullbacks in uranium when they occur. Very happy to add more if it drops lower. But there's also this worry I have that it's just going to get away and it's just going to take off. And it's already had a really good year, right?
I spent a lot of time on this chart on CCJ specifically for Dirty Sexy Money. And I'm now just 3 months later being reminded of why I added CCJ. And it was the beauty of this reversal long term.
I mean, that is a multi-year reversal, and the price action has been rewarding. You know, it's something I brought up CCJ probably 12, 15 times on weekend shows in the last 4 or 5 months.
You know, I'm glad we got to talk about CCJ and Dirty Sexy Money today. It cleaned it up a lot.
Mm-hmm.
So, you know, and once again, if you try to do this with tight stops, basically swing trade, I don't know how much luck you're going to have. You're going to catch some momentum shifts and this and that, but I love it position style. I love it cash flow style.
Well, if you love it position style, my stop was based on swing trading intraday data. If you love this position style, honestly, I think you got to get a stop loss at least underneath 3.
Mm-hmm.
Yeah,
To
minimum
break out.
3. The breakout. Again, I'm discounting this. It's got to be a minimum of under 3. If you're a little bit more conservative, under 2.5. But I honestly, though, if you like that position style, you should have been looking at this dip. If you like,
well, we brought it up
style.
2 weeks ago.
No,
on
I
that
know
dip.
you. I know you were. But if you are adding position, you're adding based on you bought here, and now you're simply adding. You're not initiating a position trade 30% above the price. Like, that's not going to happen. Plus, I don't think the analysis is there. But again, if you are looking at a position, adding 2, that's a different conversation than the one I was having earlier.
Mm-hmm.
All right. So the other ones, I have a trifecta of gold mining stocks.
Trifecta?
A trifecta of gold mining stocks for you to choose your favorite cheap gold miner. Now, I really am excited about adding gold from a cash flow perspective. I mean, you guys talked me into selling a naked put I wasn't planning on doing earlier today. I just like the stability in gold. And when I see stability, I immediately think cash flow with directional opportunity, because I mean, I'm just really old fashioned. If bears can't break support, price can do 2 things. If support don't break, it either trades sideways or it goes up, So my 3 trifecta are HMY, and I want you to pick the favorite one.
Okay.
HMY, AUY, and IAG.
Mm-hmm.
All right, so you got AUY. Give me them again, Mark. You got Umana.
AUY, HMY, and IAG.
IAG was the last one. Okay. And Chucky, what's your time frame? What's
Forever.
I just want to make
gold.
You're looking to add
when I
portfolio
add to gold positions, I only trim gold positions in extreme profit situations.
So you're looking, you have in your portfolio allocated a certain percent to gold, and right now you're underneath that percent.
I'm low.
You're looking for something. It can be gold, it can be GDX, it can be any miner, but since we're playing the game, we're looking at cheap miner here.
Yes.
Right. Mm-hmm. Okay. All right. So Tim, you want to go?
Yeah, I'll go. I would throw IAG out first. Okay. And I'll tell you why. Underperformance against the other 2 relative over the last couple months. It's also stuck in a long-term range relative, especially I'm looking at like the weekly, monthly type charts. And if you look at that, it's actually below. I really like AUY and HMY's longer term reversals better. If you flash over to HMY next, compare it against this IAG on the long-term chart real quick. You'll notice it's got better relative strength against it, also threatening that reversal characteristic coming back up. And AUY has a very similar type of feel to it as HMY in that regard, but actually a little bit underperforming. My choice would be HMY. Also looking at their sales year over year over the last 5 years, they've been increasing. Looks like pretty good healthy numbers actually year over year. They got a 12 PE ratio, 9 forward PE ratio. Long-term technical charts kind of grab my attention first. My pick would be HMY.
Yeah, I'm going to have to go ahead and agree with Coach Tim from on HMY. Technically, he's talking about the relative performance. Technically, that is based on fundamentals. The fundamentals are identical. HMY is the fundamental strong one here with proper valuation would be HMY. AUY is fairly decent. Umana is fairly decent. There's nothing wrong with Umana from a valuation perspective either. But IAG, kick it out the door. Don't even look at it again. It's just a minor. That's all it is.
And I had written down, Matt and Tim will pick HMY.
Yes. Now the question
is the trend line break too on HMY.
Well, look at this. You got this nonsense is the V-shaped gold analysis that nobody liked. But what happens for standard trend comes down into the breakout channel, double bottoms, double tops. You get a breakout of 5. Now it's certainly a trash pick because it's 481, but the trigger for me would be above 5. Like I would not start this under 5. No, absolutely not. I would literally start it right above 5. And Mark, if you want to make it under 5, we'll make it under 5. Buy a share of 494 and then start everything else at 5. But on the reason, 200-day moving average on the daily charts right there. So I like this. That's a 45-degree angle downtrend. I like this double bottom. I like this retest. I like this breakout. You still got to reclaim the 200-day moving average. That's why you got to take 5 into account. Fundamentals, HMI is honestly, I think you can make a slight argument, but not a good one on AUY fundamentally. HMY head and shoulders above the rest.
Yeah. Okay, Marky, you nailed it. Why did you know we would pick this one? Why did you
It
guess
just
that?
looked, I mean, technicals look pretty.
You like,
right?
yeah, technicals are much better. Yeah, absolutely. I
Yeah,
love the breakdown. That's right.
That's what we look for.
Good
We like
enough.
better technicals.
So, I
You
mean,
are accurate.
Yeah, and so so in the cheap stocks right now, like, I'm sticking to the stuff that I like the theme behind whatever it is, and then gold, uranium, 2 themes I like.
All right, I got a true trash pick today. If you guys want one,
Of course.
all right.
Go ahead.
It is.
Matt was like, I was like, yes, and Matt's like, yeah, okay.
Okay,
Yeah, I
now-
know it's a blue chip day. Like literally,
It is a blue chip
It's
day.
a blue chip day.
IZEA. Mark, you know this company?
I think we're gonna have a lot of blue chip days going up.
No, I know what you're doing. I saw it too, and you're wrong. And you're no.
Okay, couple things. Number one, they do about $20 million in sales.
I'm going on mute.
A $200 million market cap company. They do marketing and automation campaigns, Mark, for influencers. So the social media explosion and the type of, marketing that has to go around those Instagram feeds and whatever it might be, they actually create an online marketplace that connects the marketers and the content creators, providing technology solution to bring these people together. Okay. Upward run to start the year, exploded up to 7, backfilled. Now we've got some pivot relationships developing here, a higher pivot low, threatening a breakout right there on the resistance. Matt is protesting. So Mark, what do you think of my true trash pick?
I'd have to dig because once again, like,
Wait a second. Let's define the level of my protest here. Okay. Number 1, it's a volatile garbage nothingness of stop loss hunting galore. Number 2, you said social media influencers, and all of us should have been out.
hey, listen, I read that like in young kids right now, being a social media influencer Google star is the #1 future job. That I'm serious. I'm dead serious. So like that's what kids want to do. So I'm just trying to keep an open mind, and I also weeping for the future of our country at the same time. But
Matt's just going through industrial, hard old school industrial place. Let's take a look at him. So Matt, you're out on social media.
I would rather
influence.
blindly buy General Electric with your money.
listen, I will research it, Tim, because I don't know this company very well.
I am sending Tim the Dow 30 list and just have him feel more like a man today.
Oh, dude. All right. I could look through the Dow 30 today. That actually doesn't sound too bad.
Blue chip Monday.
They're talking infrastructure, so industrial, kind
That's
of analysis.
that's my segment from now on. Blue chip Monday.
Blue chip Tuesday. Trash that makes cash is popular. Mark, you've made it popular. We have a lot of fun doing it here on a weekly basis. So I'm hearing a research from Mark on IZEA, and I'm hearing a hard pass from Matt because it's social media garbage. You could probably just buy Facebook.
Let me reiterate.
The social media.
You can put social media garbage in front of it. You can put just any adjective or name or pronoun, surname you want to in front of it, or you could just label it pure and unadulterated garbage.
It's a true trash pick. Absolutely. See,
Listen,
through and through.
all of you need to stare at Microsoft just to make yourself feel better about yourselves.
Or Google. Yeah. So that Fang Flash actually earlier was telling a lot about what's
I
going
saw
on in this
that
market.
breakout in IZEA during my scanning. I was like, I can't do it. I just
Skip
can't
it.
do it. Tim sees it. He's like, I got you a trash pick.
Well, did you have one, by the way?
No, I did. Are
You
you kidding me? It's a
skipped
blue
all the
chip.
trash
It's a blue
today.
chip Monday. What are we talking
Fair
about?
enough, fair
Blue
enough.
chips are rocking today.
By the way, the chat's talking a little bit about something that will be happening this week. One news item I did not see as we start to wrap up. Coinbase did announce their IPO date here,
Yeah,
guys. 9 days
bringing
from
it.
today. Yeah,
Bringing it.
next Wednesday.
Can't
9
wait
days
to
out.
analyze that, how overvalued they are.
It's going to be crazy.
I'm going to give you the
$14
correct
quadrillion
answer. A
market cap.
lot.
Like 14.
Yeah.
How much time is going to be needed on that one?
Oh, to
6
trade
months?
it? 4 or 5 months.
See,
Probably.
y'all are getting excited about an IPO. That thing isn't IPO for me for at least 3 months.
Yeah, I'll wait on that one quite a
Y'all
bit.
talk about it. I'm not
Yeah,
going to
I mean, because Roblox for me was a rare dab into something like that, but that's just because every once in it was just a guilty.
I'm more excited for Roblox than I am Coinbase. I can tell you that.
Yeah.
I mean, I've been waiting for the Roblox IPO for months and months and months. I couldn't resist myself.
After Coinbase gets me some data, 3-6 months out, I'll be interested.
No, it'll be fine. It's going to be a fat pig on release.
It will, 100%.
It will.
No doubt about it. Let's move into final thoughts here, guys. We are going to podcast today. Got a busy day on Mondays, as always, over here at Tackle Trading. Mark, let's start with you for the team out there. What do they need to be paying attention to? Any final thoughts for our community?
It could be a really good month. And I think we're going to have a lot of blue chip days moving forward. The market strength in the last couple of weeks has been in traditional blue chips. The ARC type stocks, the SPACs, the underbelly, it's really struggled and could continue to struggle because I think, fundamentals matter again in a sense, right? But whatever the price action is, if it's a good month, just stick to your rules. Don't be overly greedy. Take advantage. There's probably going to be some good directional opportunities. There's going to be probably some good cash flow opportunities. But stick to your plan and don't feel like you're missing out and need to make all of the money today. I think there were a lot of good lessons that the month of March taught us. Let's not forget those lessons. Let's stick to our plan. Let's make some money, and hopefully it's a good month for us, Bulls.
Maddie, any final thoughts?
I don't think I've been as excited about a marketplace in a very long time. And I'm not talking price appreciation. There have been bigger markets than that. I'm talking about, I get to talk about real stuff for the next 6 months. Like I get to talk about companies that actually build things, like create real things. I get to talk about infrastructure and roads and dams and bridges and buildings and things that are real. I get to talk about that. It's just a beautiful, beautiful, beautiful thing. I get to talk about a company that actually has raw materials, like physical things you can touch, and not just fake merry-go-round social media influencers. Like, oh man, this is exciting, guys. This is exciting. This is such a great, fantastic time. We got materials, industrial setting up in an environment that is before infrastructure. That is before infrastructure comes out. This is exciting. If you can't get excited about what is happening in this marketplace, then you should not be a trader. Go pick a different profession. There's a lot of ways to make money in the world. A lot of good ways to make money in real estate. Get your hands dirty. Get them way dirty. Go swing that hammer. Awesome. Love doing that. But if you can't get excited about this price movement and this marketplace, then I don't know what you can get excited about. I really don't. Like you're in an environment where you have the backdrop of trillions and trillions and trillions of dollars pumped into the marketplace, where you're now going to be talking about a $3 to $4 trillion stimulus plan, infrastructure based over the next 7, 8, 9 years. We're going to be rebuilding all of America, guys. Our airports, our bridges, our dams, our digital infrastructure, our physical infrastructure. that infrastructure plan, and I'm going to remove, Americans can put the goggles on in politics all they want. I'm not. We're going to have an infrastructure conversation in America. And there are going to be certain people that will participate in that. And then there's going to be people that just want to bitch and moan about politics. But that plan that is coming down the road, that infrastructure plan, it is not, it's not just a Democratic wish list of clean tech and clean energy. It is an infrastructure bill. And I am so excited to have that conversation as a society, to have that conversation. But I'm so excited because we are living in an environment where we're going to rebuild all of America, and we're a bunch of traders, killer market assassins that get to take advantage of it. If you can't get excited about that after the bullshit year everybody just had, after the nasty, horrible, horrific year everybody just had, and you can't get excited about what we're going to be doing in the future as a country, as a society, as a people, I don't know. Let the bullshit politics aside. This is an exciting time as a trader, as an investor, as an American. We should be proud as a people of what we've achieved in the last year. It's been a very difficult time, very difficult time. But we should be proud that America is leading the vaccine distribution. We should be proud that America is leading the economic recovery situation. We should be proud that we have come together as people and passed 3 stimulus bills to help people out to navigate a very difficult situation. And we should be proud that we're going to put an infrastructure plan in place as a people that's going to rebuild our digital and physical infrastructure. So I'm excited. I'm excited. I'm excited for a lot of different reasons, but I am excited about this. But I'm most excited about the markets aligning together in an environment that should see a leg up. I think that's exciting too.
Well said, brother. I cannot add much to that. By the way, I will only say that God's cuts that kill. He's always got a good joke here, Matt. Even on top of very, very
Godzilla
wonderful
can't.
moment.
Nope. We got
it.
nukes, buddy. Godzilla can't come in San Francisco. We'd target that. We're building digital infrastructure. Our digital infrastructure and Instagram will stop Godzilla.
There you go.
Tim will line up 1 million social media influencers as the massive defense against Godzilla. We're good.
Oh, the influencers.
We'll keep Godzilla fed for years.
We'll bring down the old god.
We got social media influencers. Godzilla's never going hungry.
There's so many jokes here. I'm going to leave them.
Last thought, Baylor Bears tonight. Beat Gonzaga.
Don't do it. Just Zag's
I'm just
win.
a fan at this point.
Bring
Don't
it
care
home,
about the bracket.
Bring it
Whatever.
home.
Just a good game. I'm looking for a good game. Looking forward to watching it.
I'm so excited for infrastructure.
Yeah.
So excited.
We're going to be talking about it on the podcast, which we're going to go do here in just a few minutes. By the way, I did drop a link to our 15-day pro trial. If you guys are out there, you're watching the show, you've been a part of our YouTube channel here, and you've never tried our pro membership, 15-day trial link below every one of our videos. Come and see what we do on the back end. We've got all kinds of different content, courses, you name it. We'll see you over there within the pro membership. Outside of that, guys, we'll be back tomorrow, same time, same station with this halftime report.